Optimistic on reforms, but warning bells on growth and the fisc, and yet another nudge to the central bank to ease interest rates. That, in essence, sums up the mid-year economic survey which was tabled in Parliament. The report admits that there are downside risks facing the economy, and achieving the 7.5% growth target looks difficult. This is the upper end of the government's projection. Another crucial warning coming in is on the fisc. The survey is cautious on fiscal slippages on account of the farm loan waivers as well as other spending. But at the same time, the survey remains upbeat on meeting the fiscal deficit target. It also points out that inflation is likely to remain well below the Reserve Bank's 4% goal, and describes the scope for monetary easing as, and I quote, considerable. The survey also argues, and I quote again, that a cyclical condition suggests that the policy rate should actually be below the current rate. So in summary, the survey arrives at this conclusion, and I quote again, the economy is yet to gather its full momentum and is still away from its full potential.
Farm loan waivers are going to be deflationary, not inflationary. The critical assumption is that, as the finance minister has repeated, the centre will not relax the fiscal borrowing limits of the states. If that is the case, then in order to accommodate the loan waiver, states will have to either cut expenditure or raise taxes, which will be deflationary. That slashing of capital expenditure represents less demand, less growth. And it's because of the way the loan waiver interacts with the FRL limits that we're going to see this deflationary impact. The surprising thing is that India, we've not deleveraged at all, barely deleveraged. So in terms of the Reinhardt-Rogoff perspective, the twin balance sheet perspective, it is, I think, almost premature to say or to think that growth can rebound very quickly unless we do and clean up and do the deleveraging in the first place. So I think this twin balance sheet perspective, the fact that we've not deleveraged enough, is something that we have to keep in mind as we think about growth going forward.
The acceleration for growth in 17-18 was predicated in part of a very sharp recovery after demonetization. But as we've said in the past, even in the first quarter of this fiscal year, the recovery has been incomplete and patchy at best. And finally, I think, as the survey kind of points out, fiscal policy here is going to be neutral. The fiscal consolidation at the central level, in my view at least, may be offset partially by states. So you won't have any benefit from fiscal. So keeping these factors in mind, we're of the same view here. Growth is going to remain soft, may well dip below 7%, and and so that's something we have to all accept, learn to live with.